The Fed has accumulated nearly $5 trillion in garbage debt in order to prop up the stock market and indirectly the rest of the world. They are not alone, as all other central banks have engaged in the same destructive policy. The challenge has always been, how do we reverse this without completely collapsing the global economy? You came here for the truth, so let me unveil that for you. Today we are going to look at the Fed's discussion. And I want to connect that in with a few other issues. Let's begin right here. Wall Street ended lower on Wednesday after a late afternoon reversal following signals from the Fed that it could change its bond investment policy this year, quenching a rally sparked by a strong private sector jobs report. They're saying that everything is just fine. And so perhaps it's time, after a decade, to change our policy. To change the fact that we have hidden $5 trillion of garbage on our balance sheet. And that's at least nearly $5 trillion. There's a lot more. Of course, in the limited audit of the Federal Reserve, we saw $16 trillion. Who knows how much there really is. Also, investor concerns about the Trump administration's ability to deliver promised tax cuts were intensified by comments from lawmakers on deep divisions in Washington. We've seen what's happening back and forth. There's one thing that the Congress is good at. It's that they're unable to make decisions. I guess that's positive. Anyway, they're considering it to be about $4.5 trillion. Sure. Their balance sheet is basically holding on to the worst of the worst. We're not talking about something that would benefit the U.S. I mean, it's just saying, look, we'll buy this garbage from you. It's toxic. Let's get it off your books. And then you will look better as a result. But of course, it doesn't work like that. You can't just keep it off the balance sheet just like they do with Medicare, Medicaid, and all the other unfunded liabilities. Just because you have this quasi-government sort of private institution called the Federal Reserve, which prints the currency, loans it out to the government at interest, and you can say, look, you hold on to the debt for us, nothing's going to come of that. It doesn't work like that. All central banks right now engaging in the same exact garbage, exactly the same. Either it scared participants because the talk that it sounds like it may be, the stock market is bubbling, or there's some thought that normalization of the balance sheet is going to harm growth. Of course it will. Or that we are going to get more rate hikes. It's clear that that's what they've always done this for. The stock market was declining. They jumped in. They bought trillions of dollars of, I don't want to call them assets, but they bought trillions of dollars of garbage. And what do you expect, really, if you're going to pull that out? I mean, even if they start pulling out, it wouldn't surprise me if they do it in such a trickle fashion. I don't know how they're going to do this without completely destroying the economy. I really don't. I don't know how it's going to be possible. I mean, the interest rates have been slowly increasing. And we don't know at what point they're going to stop that. But you see the stock market, I mean, it needs some level of, putting the brakes on, but they're not going ahead with that policy. They're not trying to stop it. They're just trying to show that, no, we're doing stuff, we're increasing the interest rates just casually and carefully. They can't do this. They do it every time, but they shouldn't do it. Look at this. All the central banks engaging in the same policy, as I've said, and you can see clearly all at the same time. There is only one policy, and that is ramp up the printing presses. Everyone, the Fed, the ECB, China, Japan, England, everybody, they are trying to expand their balance sheets to the point where it's, the percentage of GDP here getting closer and closer to 100% as time goes on. Many people will say it's manageable, don't worry about it, all this stuff. You can't go ahead with this policy. Never before, never in history has this been done. It's the craziest experiment in finance ever. So we are living in interesting times, there's no doubt, because just since the financial crisis, we have had an expansion of the monetary supply far beyond anything that was created before in just let's say, a year and a half, more money created than all of the years combined. It's not going to end well. Well, the GDP numbers are out, and this is the GDP Now forecast. I've brought it up here before. I'm sure you've seen it. And it essentially says that, you can see it for yourself right here, 0.6. That's the Fed forecast. Right from the website FRB Atlanta. Every time, every single month, every quarter, every year, they start high, they end low. It's just the way that it is. Every time. It's never higher except for that surprise one time when they implemented Obamacare and everyone started paying through their teeth with all of the expenses that were incurred. That's it. Just because they added a new tax, that expenditures had risen and it was all directed towards Obamacare. Other than that time, this is what happens every single time. Let's move on quickly. Right here. Credit card debt. Oh, how I love credit card debt. Revolving consumer credit has expanded once again over $1 trillion. Over $1 trillion in credit card debt. Revolving consumer credit specifically. And you look at it and you figure, what are people doing? Since the financial crisis, there was perhaps some deleveraging, maybe. But ever since then, slowly but surely, and now with a quickening pace, it has been increasing. People individuals are expanding their debt. They're doing exactly what their government's doing. They're learning from their overlords. Get into debt, it's okay, it's okay. Big mistake, I say. This right here, the Miami-Dade County condo sales and inventory, I believe that Florida is often the canary in the coal mine for what we will experience in other places. It's often seen as a vacation area, so people are going to sell their vacation homes prior to their own places. And it shows you. I believe it was during the financial crisis, probably just after the financial crisis, where you saw a vacancy rate of something around the lines of 19%. Vacancy rate. It's unbelievable. Anyway, look at this. Declining. This is worrisome because, as I said, it's sort of like the canary in the coal mine. And I had one of my subscribers here who's a realtor in Florida tell me what's happening. And this chart explains it exactly. Cars for concern. Contribution to changing gross domestic product from motor vehicle output. You can see this one right here. What is that? That's cash for clunkers, most likely. They implemented a policy saying, look, you bring in your old car, we'll give you some money, lots of money for it compared to what we normally would. And we will then, if you use it towards getting a new car. So it's a program to try to get the auto industry going again. And there you go. There was your rise. And immediately following that, a significant drop. And look, it's not doing well. Look at the trend. Declining as well. Because people are maxed out on the amount of debt that they are. Yes, there is still an expansion, but they're just redlining. Everybody's redlining. More and more and more people are engaging in the policies that the Federal Reserve, that the on a municipal level, on a national level, everything. And then there's this, just for fun. Yes, it's true, we enslave you. And that's the way that this works. I find it to be the truth. That the Federal Reserve, the central banks, are ultimately the slave owners. And we're the slaves. Working within this monetary system altogether is very, very risky. It's very dangerous. It's a fragile system that at any moment, look at the flash crash of 2010, it could drop 1,000 points instantly. And what would people do when they can't even react to sell what they have in time? All I'm saying is there's much risk out there. If the Federal Reserve rolls back on its policy, we're going to have very, very big problems, and it will happen as quick as they roll back is how fast this could all happen. But of course, it's all about the words that they use, and that is they actually have stated, the Fed stated, that is a tool. The words we use are a tool in order to manipulate the markets. If they're going to talk about pulling back, I don't think the markets are going to like that very much. If you found this video informative, please give me a thumbs up. Last but not least, if you found this video informative, I know you will find my books, The Money GPS, and my new book, just released, Global Economic Collapse, even more informative. The first book is about the 4 asset classes, how to profit from them. It talks about history as well. The new book is about familiar topics, but also into more of, okay, how do I get this done? Okay, so it's about reducing your monthly expenses, becoming self-sufficient, and talks about a different way out. This book is The Money GPS Strategy, and that's lowering your expenses. And then the first book was about the Money GPS Formula, which is essentially trying to have more assets than expenses to pay off, and combining the two together creates this incredible synergy. If you found this interesting, check out Amazon. They have a look inside feature, so then you can actually just flip through the pages of the books to see if you like them. Take care.